Good evening. Welcome to The Global Shift, where we explain complicated financial phenomena using unnecessarily elaborate metaphors and occasional puppet shows. Tonight, we're talking about something absolutely fascinating that's happening right under our noses. Gold has just hit $3,000 an ounce for the first time in history. Yes, that's happening. It's like watching your weird uncle who's been hoarding gold coins in his basement for 30 years suddenly become the smartest person at the family reunion. For those unfamiliar with gold's recent performance, it's essentially what you'd get if you combined a rocket ship, a middle finger to conventional investing wisdom, and a giant "I told you so" from every conspiracy theorist who's been predicting the collapse of fiat currency since 1971. This shiny yellow metal that basically just sits there doing nothing has outperformed virtually every other asset class this year, including the high-flying tech stocks that usually hog all the financial headlines. Gold has surged more than 40% this year alone, blowing past previous records with the subtlety of a freight train crashing through your living room. And if you're wondering why this matters, imagine waking up to discover that the most boring, old-fashioned investment your grandparents loved is suddenly outperforming Bitcoin, AI stocks, and everything else that the cool kids on Wall Street have been pushing. That's the kind of financial plot twist that makes people question everything they thought they knew about modern investing. Even Gerald the Depression Pigeon is shocked by this development, and he's been predicting financial doom since he learned to fly. He's currently reorganizing his breadcrumb portfolio to include more shiny objects. So what's driving this spectacular gold rush? It's a perfect storm of economic anxiety, geopolitical tensions, and the growing realization that perhaps the global financial system isn't quite as stable as we've been told. First, there's the fundamental fear factor. Global growth concerns are mounting faster than student loan debt at a liberal arts college. The recent stock market sell-off has investors fleeing to traditional safe havens, and gold is basically the financial equivalent of hiding under your bed during a thunderstorm. It might not actually protect you, but it feels safer. But why would gold suddenly become so valuable when it doesn't actually produce anything? Well, there appear to be several main reasons. 1. Trump's tariff threats have investors worried about a global trade war that could tank economic growth faster than a lead balloon. Nothing says economic uncertainty quite like imposing 25% tariffs on your largest trading partners while threatening to add more. 2. Central banks around the world have been buying gold at record rates, particularly those in countries that might not be on the best terms with the United States. It's like watching countries prepare for a financial divorce by hiding assets in the form of shiny metal bars. 3. The dollar, despite its recent strength, faces long-term questions about its status as the world's reserve currency. With the US national debt approaching $36 trillion and growing faster than a teenager during a growth spurt, some investors are hedging their bets on the future of the greenback. The question is this gold rally sustainable, or are we witnessing the final stages of a bubble that's about to pop like a champagne cork at a millionaire's wedding? One thing's for certain: when an asset that produces no income, pays no dividend, and basically just sits in a vault looking pretty suddenly becomes the hottest investment on the planet, it's rarely a sign that everything is fine in the global economy. The implications extend far beyond just the price of gold jewelry or the smug satisfaction of preppers who've been stockpiling gold coins in their bunkers. This rally reflects deep anxiety about the future of the global financial system, the stability of currencies, and whether traditional economic policies can address the challenges we're facing. But hey, on the bright side, if you happen to inherit your grandmother's gold jewelry collection, congratulations, you're now sitting on an appreciating asset that's outperforming most professional investment managers. And if you didn't, well, there's always silver, which is basically gold's less attractive but more affordable cousin. And hey there, viewer, why not smash that subscribe button for The Global Shift? We're bringing you these financial insights weekly, with just enough humor to prevent you from hiding under your bed with your emergency gold coins. Gerald insists that subscribing is statistically correlated with better investment returns. And who am I to argue with a bird who wears tiny economist glasses?